What's going on, my friends? In this video, we are going to talk about how you can make, manage, and grow your money. Yeah, I'm talking about that $1,400 stimulus check that you received. What are you going to do with it? Well, I'm going to share with you 10 different ideas, 10 different, ways you can spend that $1,400 stimulus check. This article technically was written for 10 best passive income investments for 2021, but I believe this essentially can be utilized, can be flipped for 10 different ways you can spend your $1,400 stimulus check. Because as you know, President Joe Biden just signed in the stimulus bill, and the money is flowing, the money is here. You may have just received it, direct deposit. You might be getting it over the next few days. Whatever the situation is, I'm sure, some of you guys are like, what am I going to do with it? You're thinking about it already. You're wondering, what's the plan? Well, I'm going to share with you 10 different ideas, 10 different, things you can do with your check. Let's jump right into it. Number one on my list, number one is pay off debt. Now, this list is not going to be in any particular order aside from this right here, which is paying off debt. Debt is never fun. It's not, I know some people like, oh, there's good debt. I'm not getting into the whole debate of good debt versus bad debt. Just debt period to me is like, I'd rather not have debt. If I could choose to have debt or no debt, I would rather not have it. We're not going to get into the specifics about good debt versus bad debt. I would just rather not have it. So I would personally pay off bills if I had student loans, if I had credit cards, things like that I can chip away towards to put me in at least in good standing, if not better. So, maybe you are behind on bills. That's where I definitely believe you should be starting with this. If you're in a good place where all of your bills are fine, maybe you're a little ahead, or, at least you're good. You're like, well, I've been paying consistently for the past few years, no late, delinquency, nothing like that. You're good. Maybe you don't have to spend the whole stimulus check towards that debt. But I would consider certainly paying off debt first, your bills, because you want to make sure your bills are paid, keeping your, roof over your head, keeping your lights on, making sure you can continue to do whatever it is that you need to do to get by. So next on this list, as you can see, is buying royalties. It says this is probably the most unique, we'll say, stimulus check investment on this list, if only because few people are aware it even exists. But it's a true source of passive income. We'll call it passive income in this case because that's what it is. But one with a unique twist. Rather than investing in securities or property, you'll be investing in licensing arrangements. In doing so, you'll participate in the revenues generated by a wide variety of ventures, including music, videos, syndicated TV programs, mineral rights, products, oil and gas, and even venture capital financing deals. All become available because the product creator or the original investor chooses to sell off royalties to generate immediate cash. By investing in those products or ventures, you'll earn royalty income on your investment. It's even possible to resell a royalty you've purchased later on, and you can do it through royalty exchange. So something you can definitely consider checking out because it is unique. And maybe you've kind of gone through some of these other ideas that we're going to touch on in a moment, and you're like, you want to do something different. Your bills are paid off. You don't really have debt or anything like that. You're good. Well, royalties through, again, royalty exchange might be one particular option, one idea that you might want to jump on board with. So next on this list, as you can see, it says real estate crowdfunding. Real estate crowdfunding is another way to invest in real estate, but one that's more specialized. That's because they give you an opportunity to invest in very specific real estate investments. An example is Fundrise. The platform offers two very distinct investments. The first is what's known as REIT, which is a non-publicly traded REIT available only through Fundrise. You can invest in an e-REIT with as little as $500, which is well below the $1,400 we're going to be getting. The Fundrise e-REIT has been producing returns ranging between 8 and 12% per year over the last several years. Similar to publicly traded REITs, the Fundrise e-REIT also invests in commercial property like office buildings and apartment complexes, but the platform gives you the ability to invest in individual real estate transactions. This is done through a Fundrise e-fund, which requires a minimum investment of $1,000. So definitely consider real estate crowdfunding, such as Fundrise, as another option. And again, I'm starting technically at the bottom of this list. You might find that some of these next upcoming solutions, these ideas, ways to help you with making money, or just giving you ideas, things to do with your $1,400 stimulus check. So you want to stick around. And if you haven't already, like this video, subscribe to the channel, because there will be a lot more videos coming out that might bring some value to you on your end when it comes to just making, managing, and growing your money. It's pretty late right now. I'm tired and I'm going. I'm just like, I had a full day, a full plate, but that's not stopping me. Because next up are robo-advisors. And I actually used to use Betterment, which essentially robo-advisors will help you with being able to, let's just read it right here, this part. It says a robo-advisor, also known as a robo or a robo-advisor or a robo-advisor, I don't get why it says that all pretty much the same way, is a type of brokerage account that automates the process of investing. Most robos charge lower fees than conventional financial advisors because they invest your money in pre-baked portfolios made primarily of specifically chosen low-fee ETFs, which are exchange-traded funds. Some robo-advisors also offer access to other more customized investment options for advanced investors or those with larger account balances. But essentially, it's, as it's saying, it's robo-advisors, baby. It's not working with actual people, actual brokers, people on the other end. And some people kind of don't really like these just because they're like, well, it's all about that whole you're giving into like the systems and computers and all that, robots, and you're cutting out people. But at the same time, some people are like, but that's going to allow efficiency. Maybe that will generate greater returns because it's more science and data and stuff behind it, supposedly. So if your goal is to make money, so definitely wanted to make sure I jumped through that one, in which, like I said, I had used Betterment in the past. And, I was doing well with them. No real complaints. I just wanted to take a more hands-on approach when it came to my retirement, my investing, and actually, know where my money's going in terms of what specific companies actually say, well, I like all those, but I didn't like that one. If you're part of one of these portfolios, you can't, make the decision of saying you don't want to support one particular company or something like that because, the robo-advisor is running the show. But I still would consider it's a great solution, great tool, great option for those of you who are just getting started with investing, thinking about your retirement, don't really want to deal with, other people as much, but you do want to do it, kind of intimidated, don't want to jump into learning it, teaching yourself, which it's not that difficult, not that hard, but I certainly understand maybe you don't have the time. Then I think Betterment is a great option. I think the other option over there was Wealthfront, which I haven't used, but being that it's listed here in this article on Forbes, can't be bad, right? Maybe it could be. I don't want to say that, but I'm a believer that they would vet them out and make sure they are legit. So we only want them legit companies, you know what I mean? So next up on the list, as you can see, it says intermediate bond funds. So if you like interest income investments, intermediate bonds can be an excellent choice. They pay much higher rates of interest than banks and U.S. Treasury securities. And while they aren't risk-free, they're much more stable than long-term bonds. Intermediate bonds typically have maturities of less than 10 years, which makes them much less sensitive to interest rate changes that can lower the market value of longer term bonds when interest rates rise. REITs and dividend stocks are stocks, which means they're risky. Meanwhile, real estate is at an all time high and also risky. Immediate bond funds are the safest of the group of investments mentioned. And it says probably the best way to invest in bonds in a way that will provide adequate diversification is through bond funds. An example is the Schwab US Aggregate Bond ETF. It has a current yield of 2.4% with the 5-year average annual return of 4.31% through the end of 2020. The average maturity of the bonds is the fund in the funds is 8 years and more than 85% are rated. AAA that will give you high interest returns in combination with a reasonable level of security. So again, it's that last part here. Excuse me. That will give you high interest returns in combination with a reasonable level of security. Because again, they are not stocks and they have less risk in that sense. So that is why a lot of people do like going the bond route. Next up, we're going to get a little more creative, a little more hands-on, which is creating and selling an online course in which you can use things like Udemy and Kajabi. You don't need to use them. You can create your own courses on your own website using platforms like WordPress. And I'm actually going to be creating. I have another channel in which I will be creating kind of like a course, kind of like a guide, helping to show you ways that you can create your own website, kind of do your own small business, things like that, in which it will allow you to, make your own. Well, essentially, you can be making your own online course with your own business, but you don't need a business to do that. That's just another option, another way that you can make money, but using that $1,400. So I'm kind of going off it. But at the same time, oftentimes when you have a business, one way to help with generating awareness, helping to increase sales is creating and selling an online course in which you don't need a business to do that. So that's the beauty of this. And that's why it's on this list, because an individual who just received their $1,400 stimulus check can use it to invest in buying again, your own kind of branding, things like that will allow you to do your own online course. But you don't even need to do that. You can sign up with platforms like Udemy and Kajabi. Not too bad, my friends, not too bad. And that's just an option for those of you who want to get more hands-on and, maybe be creative, have more fun, take more control. There you go. So next on this list is peer-to-peer loans, P2P. And essentially, as you can see, P2P lending is a way to earn higher returns on your investments by making loans directly to consumers. P2P lenders make personal loans available to consumers for various purposes, and monthly payments are collected and paid to the investors in those loans. As an investor, you don't typically purchase an entire loan. Instead, you'll purchase slices of loans referred to as notes. These notes can be purchased for as little as $25. That means you can spread an investment of $5,000 across 200 different notes. And I'll jump down here. And as you can see, it says one of the largest of the P2P lending platforms is Prosper, and reports an average annual return of 5.3%. which is well above what you can get with bank saving products and U.S. Treasury securities. And this says Lending Club is no longer accepting new investments due to their recent acquisition of Radius Bank. Interesting. But either way, Prosper is still an available option for those of you who want to, maybe you're already invested in the stock market, you've done bonds, you've done these other things, and you're like, I want to do something different. Maybe you want to support other people and have, again, more control and a say as to who, kind of what the project is or who it is, things like that. This might be an option for you. All right, next on this list are real estate investment trusts. Again, REITs, real estate investment trusts. And I'm just going to read this beginning portion where it says, if you want to invest in real estate, but you don't want the responsibility of maintaining one or more individual properties, you can invest in real estate investment trusts, commonly known as REITs. REITs is something like mutual funds that invest in real estate, but not just any real estate. A typical REIT holds commercial properties. Those can include office buildings, retail centers, large apartment complexes, medical facilities, and other types of non-residential property. And this part right here says REITs distribute net income from the trust in the form of dividends. But you'll also participate in capital appreciation when properties within the trust are sold. So REITs are a great option for those of you that are, it's kind of like stocks. It's kind of like investing in the stock market, things like that. But you're putting it behind, essentially property, essentially businesses. I want to say the businesses because a business can move and another business can move in. So as long as, this is where it's tricky because some people might think or have the impression like, well, the pandemic and then businesses weren't in there. So that means there's a lot of empty property, which that's where it's not good. But the economy's opening up, baby. So you got to be thinking ahead, things like, thinking outside of the box a little bit. Next up is real estate. And while I don't believe, at least not here in Boston, you're going to find anything for $1,400, I would say it is a small amount of money that you can use towards your down payment. Yeah, they have a lot of first-time home programs, first-time home buyer programs, FHA, that help support you with getting into a home with a pretty low, I think it's like 5%. I feel like, why does 3.5 come to mind? It's pretty low. That's all I can say that. I believe it's 5% down. And like I said, I don't think you're going to be able to do it necessarily with $1,400, but you can use that along with any other, home savings down deposit that you've already set aside and have been waiting to, roll out there. So definitely wanted to share that. And I like that it was pretty high up because it's like, at this point, what can be left? What's next? Well, the next best thing is, as you can see, dividend paying stocks. I actually just made a video talking about dividends and showing you my dividend portfolio, showing you what companies, what businesses I actually have in my portfolio, where we're at today, how much money I'm up or down, maybe, who knows, how much I've made in dividends so far. And, I just started it fairly recently, but it's a small amount that I'm contributing every week. And we'll do like an update. You guys can follow along. And, if you don't have your own dividend portfolio yet, I would definitely recommend checking out that video. It's my previous video, but also subscribing to my channel. And hopefully you get motivated to start your own dividend portfolio in which you can begin to make some money with these dividend payments, baby. Now, some of you might be like, what is it? I don't know what a dividend is. I do investing in stocks, but I don't get dividends. Well, my friends, you've been missing out. But you're fortunate because you finally made it. It says dividend paying stocks may not provide the explosive price appreciation seen with pure growth stocks, but they offer steady, predictable returns. And because of those steady returns, they tend to enjoy more price stability while providing a regular cash flow. But unlike fixed income investments like certificates of deposit, dividend paying stocks also offer capital appreciation to go with those dividends. That will give you the benefit of both a stable cash flow and price appreciation, which more what's more, these stocks typically pay higher dividend yields than the sub 1% rates currently being paid on savings accounts, money markets, and CDs. Basically, you will get more money from your money being behind a lot of these good dividend paying companies, these stocks, than it just sitting inside of a savings account. Because a lot of people are like, I'm just going to save it. Your money is literally just going down the toilet when you just let it all sit in a savings account, especially long term. Not good, my friends. So, number 1 or number 10, however you want to look at this, is dividend paying stocks. I have a video that I literally just made showing you my dividend portfolio. And, like I said, if you haven't started your own account yet, I would suggest consider looking into M1 Finance, maybe Betterment, Webull. There's a lot of different options out there. And, you don't have to throw a lot of money necessarily into this to get the ball rolling. But you just got to do it though. Like it's one of those things like be smart, definitely make educated moves. You don't want to lose your money, of course. But at the same time, when it's just sitting in a savings account, it's not doing you no good. So on that note, I need to get some sleep because I'm exhausted. It's late. And, I hope you guys found this video helpful. I mean, I don't know if you've received your $1,400 stimulus check yet, but hopefully you get it soon. And hopefully one of these 10 different, technically 11 different ideas that we've covered in this video are helpful for you, and you make a good financial decision with, what you decide to do with that money. Because at this point, it should be about, well, I don't know what your status is, what your situation is, but, I know you have that $1,400. So it's not necessarily about making money at that point. Now it's about managing it properly. And that's why the first thing I started off with was paying debt, your bills, kind of budgeting, so to speak. But after that, if you're good there, then we're going to keep it moving and head over to that growing your money topic, which is where things like dividend paying stocks comes into the picture. So I hope you guys found this video helpful. If so, like this video, subscribe to the channel, and you already know I'll see you in the next video. Peace.